Getting behind in your tax filing requirements and tax payments happens to many taxpayers. I have many people approach me about settling their tax liabilities, often after they have heard a radio or television ad for reducing tax payments or paying only a mere portion of their outstanding tax liability. These taxpayers are often referring to an offer in compromise with the IRS. Only some taxpayers qualify for an offer in compromise, and there is no guarantee or right to have your offer accepted by the IRS. As a tax lawyer who has worked with individual and business taxpayers in connection with an offer in compromise, I still am not always able to say for certain if you will qualify for an offer in compromise. However, I am usually able to let taxpayers know if they will not qualify. The IRS has made it clear that beginning March 27, 2017, the IRS will return any newly submitted offer in compromise applications if not all required tax returns have been filed. This means that if you failed to file all required returns, you are not eligible for an offer in compromise. The IRS will consider ability to pay, asset equity, income, and expenses. Not all expenses are allowed, however, when computing a taxpayer's ability to pay. The expenses that are allowed are limited to the IRS collection financial standards, which are available on the IRS's website. So, for example, a household of 2 people will be allowed a food expense of $345 per month, and a household of 4 people will be allowed a food expense of $845 per month. Financial standards for other items such as housing, utilities, clothing, transportation, and other items are all available on the IRS's website. Expenses in excess of the standard will typically not be allowed absent exceptional circumstances. After considering the financial situation of a taxpayer and any equity in their assets, it is often very difficult to qualify for an offer in compromise. The IRS will typically only grant an offer in compromise if the amount offered is the most the IRS can expect to collect within a reasonable period of time. The IRS typically has 10 years to collect a tax liability. So, if a taxpayer has significant equity or significant net income after allowing for permitted expenses, they will typically not qualify for an offer in compromise. I am able to review a taxpayer's chances of obtaining or being rejected from an offer in compromise based on their individual circumstances. Taking the time to determine whether a taxpayer is likely to qualify for an offer in compromise can save them a lot of money. Also, in the event that we determine a taxpayer will not qualify for an offer in compromise, I am able to assist my clients in obtaining a payment plan with the IRS.